Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company which is in focus today is Popular Vehicles and Services. It's a dealership company with a large share in the southern market. Its IPO is opening on March 12th, closes on March 14th, price between 280 to 295 rupees a share. Total IPO size of 600 odd crores, which includes a fresh issue of 250 crores and the OFS of 351 crores, where Banyan Tree is exiting through the OFS route. And joining me today is Naveen Philip, who is the MD of the company, and John Varghese, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Naveen, let me start with you. Give me a perspective of the kind of business that you have and which are the segments that you mainly cater to and which are the big OEMs that you work with.
Yeah. So Popular has been there in the automobile business for close to 70 years. And the OEMs that we cater to is Maruti in the passenger car space, Jaguar Land Rover in the premium or the luxury car space, and we have Tata Motors commercial vehicles, we have Ather electric scooters, Piaggio three-wheelers, both in the electric space, we have Honda cars and Bharat Benz commercial vehicles. We spread across 4 states, starting state being Kerala, then moved into Tamil Nadu, Karnataka, and now in Maharashtra also. Our focus has always been in the terms of service industry. So last year, we serviced 1 million vehicles, and that's by far probably one of the largest in the country. Whereas we sold close to about 48,000 new vehicles and about 12,000 used cars as such. So our focus going forward is also in terms of the service industry in the passenger car vehicle area.
John, you're raising 250 odd crores in fresh capital. What are you going to use that for?
So primarily about 192 crores will go for repaying of our debts. And the balance is for general purpose, corporate purposes. So as you know, in our industry, the vehicles that we purchase from the OEMs are kept in our inventory. So we carry debt in our books. In September, we carried about more than about 750 crores. So primarily about 75% of that pertains to vehicle funding, so which kind of translates into sales of vehicles in the subsequent months. So the purpose of this is to repay some part of those debt.
How do you look at the inventory thing? Because the biggest cost for you is inventory of vehicles. So what is the kind of inventory that you carry across OEMs?
So typically what we carry about 25 to 30 days of vehicle stock, and plus the debtors of another net about 10-11 days. So reducing the creditors and advances that we have. So typically we carry about 30 days of working capital in our books. So interest cost, of course, is on the inventory funding that we have. So that amounts to less than about 0.4% of our revenue.
Give me a sense, Naveen. We recently heard the Maruti management talking about this as well, that inventory at dealerships is almost at 30 days, and that would mean that they may not be able to produce more vehicles if destocking doesn't happen at the dealerships. What is the situation currently at your level? Because you are directly linked to the OEMs and the sales, which is happening in the auto industry. So where are we on that with respect to demand and supply?
So if you look at a period of probably take the last 10 years or 15 years or decades, if you look at inventory, it usually moves between about, other than the COVID period when it came down to about 10 days and 8 days and all that, but it usually hovers between about 20 days to about 40, 42 days, depending on pre-festival season, post-festival season. So pre-festival season, most auto dealers would build up inventory looking at what the sales would happen during the festival season. December there would be a build-up of inventory because December is a great month to have. March there would be so in between, so if you look at average inventory across over the last 8-10 years or even more than that, you would look at it will be hover between 20 to 40 days as such. So that's per se not a very alarming situation as such. That is part and parcel of the business that we have.
And what about the demand? I mean, is there enough demand coming in for the vehicles, given the fact that inventory, it's hitting 30 days?
Yeah. So there is enough demand in the vehicles. There is a slight lowering of demand. I would say tepid demand for probably the vehicles are sub 8 to 9 lakhs in terms of pricing, but there's demand in the SUV space, and a lot of these vehicles are actually in shortage. So if you look at vehicle wise, then the inventory ratios would look very different. But overall, the demand is quite robust for us.
John, you have a total indebtedness of around 630 crores. You're going to pay 192 crores in loans to which you carry from ICICI Bank. What will be the other route to deleverage further your balance sheet?
So, as I said, in our industry, we do carry vehicle, and as Naveen was mentioning, typically about 30 to 35 days of inventory. That we will continue to incur as we go ahead. But more importantly, when you look at the business as a whole, from the investor point of view, the return on equity that we generate, for last year we generated about 18%, and this year for half year it's over 10%. It's improved to 10% for 6 months. So that is finally what I think one investor would be interested in. So this inventory is a part of the industry per se, of the dealership industry, which we continue to incur.
And on the margins front, you've been hovering around 4.5, 4.6% margin on EBITDA level. Is there enough room for you to push those margins higher, or is this the industry normal which for you?
No, this will be obviously pushed higher, and we have been enhancing this in the past also. The focus has been primarily on our service pie. As you know, in our dealership, there are two major pies. One is the sales of vehicles and pre-owned cars, and the other one is the service portion. So typically for a service portion, the entire EBITDA of the group, nearly about 55% of the EBITDA comes from the service portion, even though service contributes to hardly 14 or 15% of the top line. But when it comes to EBITDA, it's the service pie which gives us the most of the profitability. So our focus has been on enhancing the service pie of it. So for the last few years, both the organic and inorganic growth that we have had, our focus is on enhancing the service centers. So normally, if you have one showroom that we procure or we install, maybe about 6 or 7 service workshops is what we put across to cover the market, because that is where our focus has been. And more importantly, since we've been in this business for so many years, and as you know, we were the first dealership for Maruti way back in '84. So we have built up a moat in terms of providing the service, in terms of the skills that we require to service vehicles. So whether it's a painter, tinker, mechanic, or service advisors. So we do have a training institute which builds up this technical skill, which cannot be replicated by other dealerships. In fact, in most of the OEMs, when they do have these skill competitions, more often than not, it's our people who get the awards for the skill competition. So our focus is on enhancing the service pie of it, and which will enhance our margins as we move forward.
And just to add to that, in terms of your EBITDA margins, where we are around 5% odd and 5.2, 5.3 as such. If you look at the sale of the vehicle and the turnover that comes in, that skews the EBITDA. But if you look at actual PAT, so FY22 we were at a 34 crore PAT, FY23 we were at a 64 crore PAT, and this year first half we are already at a 40 crore PAT. So I think in the automobile dealership thing, you should probably, the more focus should be in terms of profit after tax rather than EBITDA numbers, which gets a bit skewed in terms of, because the bottom line being the vehicles that we sell and the turnover of the vehicles, which skews it a little bit.
Just to add to what Naveen said, as you are aware that there's a lot of premiumization happening in this industry, both in terms of the vehicle sales, where you have the Nexa vehicles, the SUVs being predominant compared to the earlier period. Similarly, when it comes to service, these also percolate down to the service, where the service per car also, the premiumization is happening. So, and that is why you find that the last few years, the net asset value per share, the NAV per share of ours which is hovering around 5 rupees per share about a year or two in FY 2022, has come over to nearly over 10.22 per share in FY 23. And in the middle of the year, that is halfway in September, that has further increased to 6 rupees, 6 point something rupees, 6.38 rupees as we speak in September. So this is how we are improving our profitabilities as we move along.
Earnings per share, right?
Yeah, Naveen, my point to you is that your service revenues, yes, 14.8% of total revenue it contributes, but it has an EBITDA margin of 46.6%. So how do you plan to increase your service centers and service after sales service which is there? Is there a you have a concrete plan of how you scale up your service centers and how many service centers you plan to do in the next couple of years?
So I wouldn't give the entire future expansion plans per se, but if you look at the last 3-4 years, from a service would have contributed about 10% probably about 4-5 years ago, and today it's contributing closer to 15% of our revenue. Just close to, in terms of CAGR, it would be about 16 to 17% CAGR. And this is what we would like to maintain. In fact, we would like to maintain a slightly higher CAGR, but this is the least possible CAGR that we'll do in terms of the service thing. And if you look at in terms of, so we were at around 430 crores in terms of service top line, probably about 3-4 years back, which is currently at about 750 crores as of last year. And this is what the growth that we continue to have and we'll focus on in terms of across these. And the expansion is, so as I said, we do approximately 1 million vehicles. The total car sales in India is about 4 million vehicles. If you multiply that with an average of 10 in terms of service to sales ratio, there's a scope of about 40 million across the country. And that's a growth that we would perceive in terms of where we can head towards. I'm not saying in terms of 40 million, but in terms of the growth possibility that is there.
And just to add what Naveen said, whether it's organic or inorganic growth. Sorry.
Yeah, continue. You were talking about.
So it's our focus is on service. So when we so when we typically when we go for a new service center, so the finance function and the operations sit together and make a financial feasibility. So typically what we get is a project IRR of over 35%, which percolates to about within 3 years payback. So this is again put in to the management, and then this is an important factor when we decide to whether to go ahead with the new service center. Even in inorganic, actually the IRR is even better. So these are factors that we keep in mind when we go for expansion. So one small correction, earlier when I quoted the figures of 10 rupees, those were earnings per share, not net asset value. Just one correction. So
okay.
Because
noted that.
Net asset value from 54 rupees per share in March 23, we have increased it to 61 rupees in September 23.
Naveen, how you manage multiple OEMs? Because are there any restrictions that prevent you from adding more OEMs to your portfolio?
No, I'm saying in terms of we have a clear-cut management structure. So if you look at John, who's sitting here with me, John is the group CFO, and he was earlier with Rani. Raj, who's our CEO, but unfortunately he's not there for the interview, but he was from Airtel. So in terms of, and he heads the Maruti division of ours. So each of our divisions have a clear-cut management thing, and that doesn't have any conflicts with each other. And it's only the back end in terms of group HR or group finance and some of the IT work that is in terms of common areas as such. So as of now, and a lot of areas we operate in different markets, different sizes, different things. So there's as of now, there's hardly any conflict in terms of the markets that we operate or in terms of the vehicles that we do. So we are doing Maruti, we do Jaguar, Land Rover, we do Honda, we do Tata Motors. So there's hardly any commercial vehicles. So there's not much of a conflict. Going forward, as I said, since our focus is on service, we would like to continue to grow with Maruti in a big way because the car park is always in skew in terms of Maruti. So that's one area of our focus as such.
And my question was on, with respect to expansion to geography as well, because you're currently in the top 4 states, which is there, southern states, which is Kerala, Tamil Nadu, Karnataka, and Maharashtra. How do you have plan to move up to Telangana, Andhra, and upward to North India as well?
Absolutely. So, so if you look at the skew, so a lot of people ask us though we started from Kerala, why we expanded in Kerala so much. The fact is that the sales of vehicles of Kerala and the number of cars per thousand in Kerala is one of the highest in the country. Probably, I mean, just a shade less than in terms of NCR or Bombay area as such. So we're looking at the high growth markets and also in terms of the areas in the states that are in terms of both in terms of population as well as high growth. So we'll combine these two and focus on where we want to grow and acquire dealerships in the future.
My final question is that you have entered into the.
There are very few dealers today which has which
please.
are beyond 3 or 4 states and having more than 100 outlets. So as we move along, we will obviously look at being a national player.
Okay,
You were asking something.
Yeah, I was asking about the electric vehicles because you entered into EV, dealership as well through Ather. Does it bring in much more, a scale for you? Can you add more EV players to your portfolio?
So EV right now, we took a view that the two-wheeler industry and the three-wheeler industry would be the one that would penetrate further in terms of EV, and hence we took Ather and Piaggio. But in two-wheelers, yes, we are getting a good traction in terms of EVs. But in three-wheeler, the traction has been much lower, especially because there is still one is CNG and two in terms of the FAME 2 subsidy, FAME 3 subsidy, that debate is still on per se. If you look at the passenger car industry, I think there was a report in ET today where Mercedes-Benz has told that they have sold only 700 out of 17,000 vehicles that they sold as EVs. And if you look at the overall car market, it's less than 1%. So I think it will take a long way, and EV this year across the globe, there's been a slowdown. But whenever the opportunity arises, we would definitely move into that. Maruti itself is launching a slew of EVs, which would be part and parcel of. And the first one would be coming out by the end of this calendar year, early next year.
Okay, gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on IPO Adda. Your IPO is opening on March 12th and closes on 14th. Price between 280 to 295 a share. It's a 601.6, 601 crore IPO, which includes fresh issue of 250 crores. Thank you for watching.